Which bank in Jamaica you know ever give away anything for free? Think about it. What do they ever give away for free? But now you have a situation where a bank is telling you that you can go and take this car and you have maybe 100% full financing, no interest for about 1 or 2 years. Where?
And that's exactly what we'll be discussing today. Hi, if you're new here, my name is Damien, and today we're looking at why your car loan is financially holding you back. Let's start things off by outlining the context. In the past, a lot of Jamaicans adopted a prudent approach when it comes down to buying a vehicle. It was a practice to save diligently through partners, borrow money from your family members or your neighbors. You scrape here, there, and everywhere else for each dollar, often over several years, and then you buy your vehicle outright. And this practice was largely influenced by the high interest rates set out by the Bank of Jamaica back then. When we look at the 90s and the early 2000s, we saw interest rates hovering in the high 20s and low 30s. Such high interest rates meant that at the time, to borrow money was substantial, and many people didn't even consider borrowing money to buy a car a viable option. Fast forward to the 2010s, and car loans have become a common mean to buy a vehicle. The move by the Bank of Jamaica to reduce interest rates reversed that practice of saving up and scraping dollars from every corner of the house just to buy a car. With banks providing up to 100% financing at rates as low as 3% at the height of COVID, new car sales took off, and banks saw significantly more demand for their auto loan products. More Jamaicans than ever before carrying a debt for the cars we drive. But something happened after the pandemic that reshaped the landscape. The country started reopening, and the demand for goods and services sharply rebounded. With production levels still low, plus the bottlenecks in the shipping and logistics industry, this led to a spike in inflation. Interest rates on loans went back up, and in some cases to double digits. So what does this mean in 2025? Go back to the age-old practice of saving up to buy a car, or just go with the wind and take out the expensive car loans?
I know who need to hear this, but nothing wrong to take a car loan.
Wait. Pump the brakes for a minute so we can understand something. Interest rates for new cars range from 7 to 9% and up to 15% on new cars. And we have to remember, cars are liabilities, or at best, they are depreciating assets, which means that cars lose value over time. In the case of new cars, they lose on average 50% of their value in the first 5 years. Hell, that new Kia you just bought lost at least 10% the minute you drove it off the lot and onto Oxford Road. That alone is enough to argue that something might be wrong with taking out a car loan just because you want to stop taking the bus, or you want to upgrade to something that have leather seats instead of fabric. Pause and think for a second why banks are so willing to lend you millions of dollars. It's because they make a ton of money from these loans. You don't believe me? Let's look at an example from a bank rep himself discussing how much car you can own.
Our plug, sir, say, I told you we're going to do it today. We have Xavier in the building, and he's from JN Bank, New Kingston. And we're going to be talking about what he should be making per month to be able to afford a car. At your interest rate at 8.5, 10 years, right?
That's correct.
Someone that can afford that car, what's the salary we're looking at?
Well, we're looking at anywhere between 150,000 to 200.
So,
for the Saluto, yeah.
150 to 200 can afford a Saluto.
That's
at 53,000 per month, comfortably.
That's correct.
Alright, cool. Let's move on to the GT line Seltos, which is the high-spec Seltos, and the entry-level Sportage, right? Which is about 86,000 per month. For someone who can afford 86,000, how much are you looking at?
86,000, 200 to 250.
200 to 250. 200 to 250.
And the video goes on to discuss more expensive models, but the point has already been made. This bank is willing to lend you over 30% of your monthly take-home salary just to cover your monthly payment. If you add registration and fitness fees, insurance, gas, and maintenance, could easily bring that 30% of take-home pay to over 50% on a car, a depreciating asset. You don't need me to tell you that this is a horrible financial decision, but that's not where this ends. Have you ever looked at amortization? Sounds like a big word, but in simple terms, it's the breakdown of your repayment schedule. Here's what it looks like using the Kia Seltos from that TikTok. The sticker price was 6.99 million, but we will round up to 7 million to simplify the math. Now I downloaded this amortization schedule from financialsensibility.com. You could see the link at the top left hand corner of the screen. So we're just going to input the values to see how this works out. We're going to start with 7 million as the sticker price for the car. Then we're going to go 120 months, or this is 10 years, for the period of loan, and then we're going to start on the 1st of January 2025. Interest rates will be 8.5%, and as you can see, $86,789 is our monthly payment. Now, your first $86,700 will split between your monthly principal, which 37 of the 86,000 goes towards, and then you have an interest of 49,500. So each payment you make, you're paying more towards the interest of the car. Now, after your first year, you have paid over $1 million in payments. Your cumulative principal, or the money that you've paid towards the car, is actually $464,000, while the interest that you paid on the loan is $577,000. But what about after 5 years? You would have paid $6.2 million in payments. Of that 6.2 million, 3.4 goes towards the principal of the vehicle, while 2.7 goes towards interest, and you still have $3.5 million to pay off. At the end of your loan period, you would have paid a whopping $10.5 million for the vehicle, of which just over 7 million goes towards the principal of the vehicle and 3.4 million towards the interest. Now, I hope this perspective encourages you to make better financial decisions when thinking about using a loan to buy a car. Everyone's situation is different, and so no single advice can apply to everyone. For some people, a car makes financial sense because the vehicle earns them far more than it costs to finance. For others, cash is the way to go because, well, them have money put down. But for a lot of us, a loan may be our only option. In that case, I'll share some of my tips to consider when looking to buy a vehicle using a loan. First, start with how much car you can afford. And no, don't let the banks tell you what they think. I recommend your car payment should be about 20% of your take-home salary. 25% if you're getting a great deal. Remember, your monthly payment, insurance, registration and fitness fees, gas, maintenance, all of that makes up your total cost of ownership. And your total cost of ownership should not exceed 30% of your take-home pay. Next is the interest rates. Before you sign on any dotted line, make sure you shop around. Different institutions offer different rates. Pin them against each other to negotiate the lowest possible rate and other favorable terms like no penalties for early repayment. Which takes us to the loan period. I aim for no longer than 5 years. It's tempting to take the maximum repayment period offered, but the longer the life of your loan is the more interest you pay. And remember, you pay the highest amount of interest at the beginning of your loan. It's called front loading. And finally, stick to vehicles that are fit for purpose and models with a slower depreciation so you have a better resale value when it's time to resell. In other words, don't buy a Ford Raptor just to drive you and your laptop to work and back home. It's a waste of money. Bonus point, keep your car for as long as possible to reduce your overall cost of ownership. I'll end with this. A car is likely one of the biggest financial expenses you will ever make. So ensure you do your research and evaluate your circumstances before making that step. Your financial future depends on it. Thank you for watching this video. Let me know if you agree or disagree with me in the comments. If you find this type of content useful, give this video a like and share it with some friends. Subscribe to my channel for more content like this. I'll see you in the next one.